gives Hong Kong a chance to get back on top. Chinese IPOs continue to boom, but a trade war looms. The Hong Kong markets reached new record high Monday, attributed to a decision by Liu Mingkang, the head of China's Banking Regulatory Commission, to expand the so-called Qualified Domestic Institutional Investor, or QDII program, and allow approved banks to invest in foreign stocks and equity-based products. This move has been contemplated for at least the past few weeks and is part of Beijing's liberalizing of controls on capital outflow and part of the gradual reform of its financial system overall. Beijing hopes that easing restrictions on capital will not only help with the excessive liquidity in mainland China, but avoid a rapid appreciation of the yuan. In effect, if effective, this might significantly enhance the Hong Kong market and help solidify Hong Kong's status, at least in the medium term, as the premier Chinese financial center. Elsewhere, Chinese stock markets continue to rise, with some drops well within 5%. The Shanghai Composite is back up over 4,000, and the Shenzhen Composite is up to a new record, closing May 17 at 1,151.852. Final piece. Following up on IPOs we talked about earlier, China's Sinergy debuted today on NASDAQ under symbol CSUN and ballooned in after-hours trading to over 50% in value, well above its anticipated $8 to $10 range. China's solar cell manufacturers are hot, and this could be a sector with good long-term potential. Remember Bell Holdings, a major Chinese women's shoe retailer that we discussed a few episodes ago? Bell was oversubscribed hundreds of times and has raised over $1 billion in advance of its Hong Kong listing. Retail sales in China were up double digits each month since the year began, and stocks in retail companies will no doubt continue to generate interest with overseas investors. Bell will be the largest Chinese consumer play to date. Bank of Communications had its IPO Tuesday on Shanghai's domestic A-share market, and prices surged over 70%. By mutual agreement, the Hong Kong and Shanghai Bank will maintain a 19.9% stake of the bank's expanded shares. And a blockbuster IPO on the horizon for you strategic investors. China Postal Savings Bank, which has emerged from a restructuring as a behemoth with $208 billion in deposits and a network of 36,000 branches, is planning a 2008 IPO in the $2 to $3 billion range. That's US dollars, considering a possible simultaneous Shanghai and Hong Kong listing. Next week, May 22 to 23 in Washington, D.C., Treasury Secretary Hank Paulson will host the second U.S.-China Strategic Economic Dialogue. This summit will feature nearly all Bush administration cabinet members, with John Negroponte sitting in for Condi Rice, and include Fed Chairman Ben Bernanke. It will be kicked off by none other than Chief China gatekeeper Henry Kissinger. The Chinese delegation will be led by Wu Yi, China's famous Iron Lady, a prominent member of the Chinese State Council, which is equivalent to the cabinet of President Hu Jintao. On the table officially is a dialogue to ensure the USA and China compete cooperatively for the world's trade and resources. The summit takes place as a big looming protectionist wave is gathering in Congress, however, a wave pushed forward by the beleaguered American auto industry and labor union pressure groups. Nothing less than USA-China foreign relations overall and the fate of the world's economy hang in the balance. If the summit produces only dim results, or none at all, it will be hard for the executive branch to withstand the coming tsunami of protectionist legislation moving through the American Congress. Remember, investors, a breakdown in U.S.-China trade relations puts every stock market at risk. Don't forget, Sinomania offers advice only. Please read the important disclaimers at the Sinomania website. I'll see you next week. That's a wrap.